Welcome back, and joining us now on the show is Yaw Yan Chong. He is Director, Oil Research and Forecast at Refinitiv. Mr. Chong, hi, good to have you. First of all, after 12% decline in crude prices in the previous week, we seem to be holding on to these current levels with nearly 4% of gains as well. What is your sense? Would you call it completely macro, the decline in dollar that really seems to be supporting prices?
Well, I think to begin with, I think it was probably a knee-jerk. I mean, it is a financial situation with the failures of the banks that has affected sentiment negatively, right? However, I would argue that oil's fundamentals itself are still strong, right? Because from a supply perspective, we still have supply disruption, particularly from Russia, right? As well as from OPEC Plus as a whole. And they have actually consistently not met their supply target since Russia invaded Ukraine in March. And they are only averaging at about just under 95% of their supply target, right? So I would argue, one, there is not enough supply. And on the other hand, demand is basically coming back, particularly from China after the easing of the zero COVID policy. And China's demand has actually gone up significantly since October last year. And on top of that, even demand from India has also been strong. Last month, we saw record high domestic demand for refined products in India, and we expect that domestic demand to be higher in March. So yet I will argue that, the drop is, as I said, financial driven, and I would not be too surprised if once this blows over, it goes back to above 80. Of course, the caveat would be there are no more bad news involving banks.
Oh, well, yes. You spoke about the Chinese demand. What is the kind of demand growth that you're anticipating for this year now?
Okay, so Chinese demand has started growing in a significant way from October last year, from around the time where there were whispers that they were going to reverse the zero COVID policy. So on average, since October 2022, the crude imports into China have averaged at just over 45 million tons a month until March, as in this month, and up from the January to September average of 40.76 million tons a month. So we can see, and we think there will be further room to grow because the government has just started the economic stimulus measures that will stimulate the domestic economy. And for example, case in point, the government at the recent two sessions meeting has basically told its refiners to clamp down on exports and focus on domestic demand. So they would expect domestic demand to go up from here as a result of all this economic stimulus message. And we would expect Chinese demand to stay around the current 45 million tons a month type of level.
You spoke about India on how we've seen record high product demand for Feb. March seems equally positive right now. What is the kind of demand growth then you're anticipating for India for the rest of this year?
Well, I mean, it depends on how it goes, right? I think one thing that's feeding demand is also the cheap Russian crude, right? India is now, Russia is the top supplier of crude into India, right? And obviously, Indian refiners are both looking at the domestic market, which has price controls, and the export market, which is limited by windfall taxes, export taxes, etc. Right? But that said, margins for diesel in particularly, although it's come off a little bit since last Q4, it is still great. And I would expect Indian demand to carry on as they are, barring any unforeseen economic upset or anything of that sort.
Sure. Okay, all right. Thank you so much, gentlemen, for joining us. Thank you, Manisha, for taking us through this conversation. That's all about the commodity markets. For equity markets, there's some pressure that we're seeing right now, but we'll take your leave on this edition of Halftime Report. Business Lunch will take all the action ahead.